Good evening, everyone. My name is Paul Young. I'm just going to walk you through the gross domestic product for Canada for January 2016. My presentation is only one opinion of GDP. You're more than apt to go out and look at different sites from Canadian Manufacturer Association, Canadian Federation of Independent Business, trade associations, or even the banks to get their perspective on the economy. A little bit about me. I'm 25 years in business, so I'm coming from both academia, industry, as well as financial solutions. Now, my agenda is pretty compact, so I'm going to look at all aspects of GDP because you can't just look at a couple areas. You have to look at a deep dive into it, and that's what I will be doing. So in one word, January had a phenomenal switch in GDP growth. Based on the annualized growth, we're looking at 4% growth. Now, we're probably not going to see that, but it's significantly when you look at how wide range the growth is. It wasn't just one sector that grew. We see significant improvements with many sectors like manufacturing, utilities, construction, retail, mining. We've seen all that. So were there some contraction? Yes. In meals and entertainment area, we've seen that. But most general, it was a very strong first month. Now, going forward now, there's going to be pressure. Now, we're still in a period of the Canadian dollar is relatively going to be low compared to its peers. And it's something to bear in mind because that's going to impact, it makes exports cheaper, but it will push up costs in Canada as well because we import a lot of goods as well. Commodity prices. This just gives you a good chart to understand that we're still in an era of low commodity prices. If you look at even where we were in 2012, we're third in areas like oil, half of where we were in basically natural gas, and we're down in considerable areas like half of most of the prices and commodity prices have fallen. So a lot of the areas of commodity prices have fallen, and that's significantly because commodity prices is a key aspect of the economy, but other aspects of the economy in Canada picked up a lot of the slack, and we'll see that as I move forward. This shows you GDP by sector. So if you ignore the mining sector, we actually had a phenomenal growth of 1.6% growth. But what you should be looking is the trend line. Since July, we've only seen 1 month where we've seen a contraction in growth. Most cases we've been growing, and that's significant because the mandates of what the government has proposed in terms of their budget deficits and the change in government in Canada is they're putting a stimulus. Well, and the economy is maybe not growing that fast, but you need to be careful how you stimulate an economy. There's good ways to do it and there's bad ways to do it, and you need to be careful what you do. Manufacturing sales is a key driver. It's a key driver in the economy. It drives a lot of the exports, but if you look at the key driver here right now, food processing, transportation, forestry, have all seen upticks. And why do I want to bring that up quickly? Is because those are considerable areas that the trade or exports to the U.S. have seen benefits of that. In the transportation, we're seeing phenomenal growth in the automotive manufacturing sector in terms of the automotive sales. Transportation, there's a big build going out with transit systems from subways to bus, so you're seeing a big aspect of that going into play. Plus aerospace is lumped into transportation. You're seeing replacement of planes. That's coming into play as well. Power generation, the only thing I want to highlight here is that renewable energy in general is only 2% of the overall power generation or power load in Canada. It's something that you need to bear in mind, but to be cognizant of that is there's a lot of emphasis on that, but Canada still depends a lot on hydro and nuclear power. The labor market, again, despite the downturn in the oil sectors and a lot of natural resources, it's been pretty resilient. And the next slide will actually show you a lot more how much we've created jobs since 2014 up to December. Is we've done significant jobs, and most have been in full-time jobs. Is there more that can be done? Yes, but we have to be very careful how we do it in terms of policies. Retail sales is a key driver, and if you look at the growth, 6.4% since January 2015. That being said, most of that's driven by automotive, but it's still a healthy indicator of the economy because retail sales are responsible for 2/3 of the GDP. Housing starts, another good indicator that people are spending money or the economy is growing, and we're seeing housing starts in February were 212,000 units. Now, government policies come into play in terms of attracting foreign direct investment. Canada overall policies, including tax, business costs, are ranked number 2 in the world. Now, this is significant here because as governments move forward in terms of their policy debate to support any sort of climate change agenda or any sort of other aspects that they want a made in Canada issue, whether it's retirements or different things, those are going to be costs to push up business. Business doesn't absorb those costs, business pushes those costs on. So KPMG did a survey, and look at where we are. We're ranked number 2 in the world. Only Mexico is better than us. Okay, now Mexico's made some significant changes in there. So it used to be just about labor rate, but they've got control of their hydro costs, they've got control a lot more in their infrastructure. So there's something that we need to be watching as we develop policies, okay? And that's critical as a government, whether it's provincial, municipal, or federal, that we have an integrated strategy to make sure that as we look at taxation, as we look at infrastructure, that we're making the right decisions that support a growing economy. And that's critical as part of GDP growth. This looks at cost competitiveness. The U.S. itself is likely by 2020, in 4 years, is going to be the world leader of manufacturing. That's critical because Canada and the U.S. are joined at the hip. It's a good potential here as any sort of government is establishing policies to align what the U.S. is doing, ensure that we can do our same reforms to improve ourselves, to make us competitive as well. What's going to happen in the rest of this year going into 2017? Well, Canada's government is putting in a stimulus package. Now that stimulus package is up for debate in terms of how the money is being spent, because if you look at some of the infrastructure spending, it's going to green, it's going into social housing. Very little of it's going into export-driven decisions, and it's exports that really are going to drive this economy as well as retail sales. So we need to really be pushing governments to make sure they make strategic decisions to help get our goods to market. That's critical. U.S. growth is in a period of strong growth now. We have reasonable, strong consumer spending, so it's going through a period of growth. The areas that you have to watch out for that driving Canada has a lot of exports to Europe and China, those are in slow growth periods, where Canada needs to focus its investment and trade strategies in growth markets like Africa and India, because those are the areas that are going to pick up the growth, and we need to be positioned for that. Inside Canada's case now, if we're going to impact some of our overall GDP growth, manufacturing sales and stuff like that, we have to improve productivity. There has to be more of an investment in capital investment. This is a good time right now for companies reinvest in automation because the dollar is low. Now that's taking some of that income they're making in and redeploying it. That's something that we need to see. Labor productivity. We have to continue to look at ways to upgrade our skills. We have to look at different ways how we automate stuff to make sure that we're improving our labor productivity. And governments themselves need to be very careful with taxation they bring in that might impact overall. Carbon taxes in general do not help anything. They push the cost up, but they don't necessarily bring down emissions. So there's something you have to really think about it. Instead of making a policy change to support a particular group, you have to think what's best to look at my taxation and get control of my government expenses, but support an economy in the same token, because there's never going to be one policy that supports a growing economy. Now this presentation kind of gives you an overview of GDP, but also some of the issues that need to be dealt with by politicians at all levels. Also decisions need to be made by business as they move forward as part of developing, bringing their products to market, or as well as looking at how they run their operations, because we're going through a period of low commodity prices, low Canadian dollar. This is a good chance for companies to redeploy some of their cash to make them more efficient and effective operations. This is also an opportunity for government to recalibrate its policies as it supports both consumer spending as well as it supports exports. Thank you.